The local San Jose market has been volatile. Real estate prices have changed quite a bit. What does it look like year over year? Do we have any appreciation? Well, stay tuned. Hi, I'm Theresa Wellman with HomeownerExperience.com. Today we're digging into the market update overview and stats for San Jose, Santa Clara County, Silicon Valley with the closed data for October 2022. So I'm going to go through some of this data, the stats of single family homes, then condos and townhomes, and we're going to dig into some of the forecasts I have moving forward. And what you probably want to know is, has the market totally crashed? Which direction is it going? Do we even have year-over-year appreciation? So we're going to get into that. Let's look at our screen. Here's the Santa Clara County overview. As you can see, prices peaked quite a bit in the spring and have really dropped. They have, on average, settled out a tiny bit. The median still kind of dropping. The biggest difference is our supply is 40% higher than a year ago, but remember, the pandemic was crazy and different from normal. Our demand is year over year continuing to drop if we look at the same month, right, for the last 14 months. So starting in September last year, August last year over year, it's continued to drop in the number of sales. So year to date, we still have over 7,070 sales in Santa Clara County. Now, 2021, there was a huge amount of sales. You can see how this green section here is much higher than the recent past. We were at 9,600 sales, but 2019, 7,290. So 3% is the difference from 2019 to 2022. So not a huge difference, but what you can note is that the market has really switched rhythm. There is more inventory than sales, and that's continued since May, and opposite of what we had in the pandemic. But only one other time did we have that market, and that was in 2017, latter half, early 2018. So if we're looking at the normal market rhythms, we are there. We are in a normal market rhythm. Okay, so let's look just at San Jose. So if we're looking at the San Jose market, it's actually doing a little bit better than the Santa County market as a whole. Again, I think it has to do with affordability. We've talked about that before in these videos. So here you can see that the supply is lower than most Octobers going back in the recent history, except for those weird years of 2017, 2018, and the pandemic. If we look at the sales, they are kind of low for October. We were at just 329 sales in San Jose, with the lowest being 2019 at 399, but 2017 and 2018 just over the 400 number. As you can see, the pandemic years were really strong in the sales factor. So let's look at the actual numbers and stats. The average price for a single family home in San Jose is $1.58 million. That's slightly up from the previous month. And yes, it is up year over year, just a hair. But that was a prediction to be 2 or 3% up year over year after that big change in interest rates had really adjusted the market. Buyers are paying just slightly under list price on average. That's meaning overbidding has pretty much gone away. And our inventory is still relatively low if you take out the anomaly years like I showed on the chart there. And I think the biggest difference is, you hear a lot of news talking about year over year and comparing. So yes, it is different, and inventory is up a lot from last year, and the sales are down. But as you can see, that overbidding is also quite a bit different as well. The biggest thing to point out here is our days of inventory is still really healthy at just over a month, which is still considered a seller's market. I will note that if you've been out there home shopping, you notice that there is a huge discrepancy in the type and quality of home that's out there. So that is kind of pausing the market for some buyers, but relatively a pretty good, strong, healthy San Jose market. So stay tuned for my forecast and more condo and townhome data. So here's a forecast of single family homes for San Jose looking forward. The good news is market prices have bounced back. And I think that means that we've found a balance for prices, and that prices are going to hold here for a while. Now, seasonally, things do tend to quiet down a little bit, but then pick up again in January and February pretty strong. So that's just a couple months away where we might have a little bit of a lull. But unknown, I would say, or the risk is going to be interest rates moving forward, because inflation is still an issue and the federal fund rate is being raised. So banks are raising mortgage rates as well. Stay tuned. I'm going to be doing a video about that here in the next couple months about the federal funds rate versus mortgage mortgage rates and understanding that a little bit more. So there's more affordability issues that are coming forward with the interest rates that are rising. So even if prices are holding, I don't expect it to get cheaper for buyers. And so sellers, you need to be aware of that the dollar into your property, the repairs, the updates, all that stuff is something buyers are really sensitive right now because that monthly payment is not that affordable. It is still a real challenge in this area. So I do see a more balanced market ahead, which means properties will probably sitting on the market a little bit longer, but we're not going to have an excess of inventory or another huge adjustment in prices. So that's great news. So here's the stock market. Again, this is an interesting thing to track. The stock market did recover a little bit in October, as you're aware, and that has been reflected in those prices actually stabilizing in Santa Clara County as well. Now let's look at the market momentum. We're back to San Jose numbers here, or San Jose data. I like this chart that I provide on my website because it really gives a good visual of how intense the market is and what's going on. So if you look back in 2019, we were seeing a pretty, even keel, healthy market. 2020, it started to heat up. Actually, this is the end of 2019, I apologize, up to January 2020. 2021 got a lot higher, and then the end of 2021 into 2022 was really strong. But as interest rates increase, you can see the intensity of the market really started to slow down. And there's a couple different factors with that. Number one, I've got these pink circles here to show you the reverse of the active homes versus the sold homes. So it's something I've talked about if we go back to the San Jose chart. Here, where the yellow line and the green line, right? If you look at those anomaly years I keep talking about in 2017 versus 2020, 2021, the inventory was actually lower than the number of sales, meaning we were just selling things so fast. A normal market is the opposite, where there is more homes on the market than were being sold, and we're in that. But look at the delta between that right now. We're getting really close to that inversion point again. It was late 2019 when the market started to go into a different pace, where the number of active homes went below the sold homes, and it kind of tracked that for a while. And then, as you can see during the pandemic, that gray line, or the number of homes sold, was higher. So that is also reflected here in these bars, and that goes into this calculation, right? So it did reverse back in May this year to a more normal market, but look at how close these are again to touching or maybe reversing. So that's something we got to keep an eye on. I do see buyers feeling like the market is not crashing and getting more comfortable jumping in. They're figuring out loan programs, and our inventory is shrinking. So what is that going to look like as we head into January, February? That's the big question. We're going to keep watch on these numbers going forward. So interest rates, they continue to increase, but they've sort of leveled out. Again, federal funds rate and mortgage interest rates are different. So I'm going to talk about that in a future video coming up very soon. We're also going to talk about using points to buy down your rate and negotiating with the seller to do that. So if you like this information, or do you have other videos you'd like to see, please comment below. Give me a thumbs up, subscribe to this channel, because we've got a lot of great stuff coming for you. All right, unemployment still really low in this area, so jobs are definitely not an issue. Affordability and income, is really strong in this area, but yes, prices are high and interest rates are not making it easier. So let's look at the condo market. Let's take a shift off that single family market that I think is normalizing and is healthy, and look at the condo market because it's slightly different. Supply is holding for condos, unlike single families where they're going down. Sales are down, also seasonal, expected, but prices continue to go down in the condo townhome market. So there's an opportunity for first-time buyers to jump into this price point and negotiate, because we still have really strong inventory, as you can see here, and the gap between the inventory and the number of sales is getting bigger, providing more opportunities for buyers to get in and negotiate a good price. So here are the stats. The average condo townhome price in Santa Clara County is $950,000, which is down year over year and from the month. The buyers are paying about list price. This is the thing that is a big difference from the single family, is the days of inventory is getting close to 2 months. It's creeping up to show that it is not really much of a strong seller's market anymore. It's definitely neutralizing, which is why buyers, you have opportunities in this space. The inventory and the closed sales are not going the right direction in the condo market. So if you love this information, please sign up for my monthly email so that you don't miss a video with this monthly market update. I do send that out once a month. And if you'd like to understand more about days of inventory and buyer's market versus seller's market and how to track that, got a video on it. I recorded it quite a bit ago, but the information is still really valid and it will help you understand a little bit more on what to track going forward. Please comment with questions below. Thank you for watching.